jour, Computer Associates wants computer sciences real bad. It's a $9 billion hostile offer following unsuccessful merger talks. Proof of that coming up while Bruce Francis looks at whether these corporate cultures are even compatible and if investors should bank on this deal actually getting done. It's actually a pretty good story. We're back with more Power Lunch, just getting warmed up, as a matter of fact, for this Wednesday. The Dow's down 5 points. We'll be back after this. Merger talks proved unfruitful, so business software powerhouse Computer Associates took matters into its own hands this morning, announcing it's going to offer $9 billion in cash for computer sciences. And that computer services firm is trading sharply higher as a result of the hostile bid. We had it above 108 a little while ago, which is about the offer price. Now it's at 104, up 11 13/16. Computer Associates is down over $6 to $52. Bruce Francis is here to look at whether this cash is worth what could potentially be a culture clash between these two companies.
It's a fascinating story. You know, there have been mergers, friendly and unfriendly in this business, and in some ways they provide a lesson here. Well, on paper, the fit does make some sense. Consulting services, highly prized in the computer industry these days. Experts who can sort out all the conflicts in technology and make sophisticated choices for huge companies are among the most valuable employees in information technology. That's why Computer Associate wants this company, since it sells software to the same companies that CSC consults, and they want it bad. This morning on Today's Business, Computer Associates President Sanjay Kumar told me that they could go directly to shareholders if CSC management doesn't respond to that $108 a share offer.
I wouldn't rule anything out. I think my letter concludes by saying that we would never rule anything out. I think our history has been that we have never done a hostile tender offer. We have clearly encouraged other management to consider our offer very strongly. And I think I've been very successful and done the right thing by our shareholders and others in the past.
But some experts are raising flags of caution here. Computer Associates' acquisition binge has earned the company a very aggressive reputation, one that on the surface might clash with the sterling reputation enjoyed by CSC. And in a business based on relationships, not products, that difference can be crucial.
CSC's reputation in this market in particular, even vis-a-vis its competitors, is it's in a good spot. It's a friendly company, an agreeable company, a company that's willing to go the extra measure for its clients. Take CA, on the other hand. CA is the exact opposite. You couldn't find two more opposite players trying to come together.
Consultant Susan Skrupski says that the main competitors to CSC here are EDS and IBM. They are potential white knights, in theory anyway, but IBM could have a difficult time overcoming a pro forma review that would happen, Bill, of course, in any large kind of acquisition because of the concentration of power.
You know, we talked earlier, the stock had been above the offer price. It was around 110 now, and that would seem to suggest the market was looking for a higher bid. Now we're below that offer price. I wonder if the thinking is changing now.
Certainly, I think CSC looks like it is in play here, and it's a very difficult position for a consulting company that needs to be independent, needs to have the impression that says, look, I can look at all these technology choices and make the best one for you, not the best one for my parent company. So I wouldn't be surprised to see a white knight. Earlier, the market didn't seem that they would be surprised either, but we'll see.
Does Computer Associates have the wherewithal to raise the bid if they have to, if there is a bidding war that does come in?
Sanjay Kumar spoke very confidently this morning in Today's Business, and again on a conference call about their financing. So certainly they've got, I think they've got quite a bit of cash that's common for technology companies. Sounds like they want it bad.